Welcome back to the PetroNerds podcast. You'll notice there's something a little different about today's setting, and that's Ethan is not here today, but Robert Norton is. We've actually talked about Robert Norton on the podcast, so he hasn't heard that because he hasn't listened to episode 5, because episode 5 is not out yet. But so in our previous podcast, Ethan and I talked about bringing Robert on, and he was gonna ref while we duked it out. So we'll just have to duke it out without a ref now.
Yeah, exactly. No, so for those of you who don't watch my podcast on Digital Wildcatters, I do the roundup with Colin, and Trisha was kind enough to host me while Ethan's out of town. He's in Costa Rica or somewhere like that. Yeah,
he's enjoying nice sun while we were all dealing with frigid temperatures.
Yeah, so I don't have his voice, but I hope I can make up for it in what I know.
And so Robert he's a perfect stand because he is also actually a midstream expert, and you should listen to the Roundup podcast because it's awesome. But one thing you'll notice if you listen to it is that Robert Cooley wants to talk more than Colin lets him on issues. So this is a chance for us to banter and bullshit quite a bit and go through everything. But before we get into it, and there's a lot to get into because today is February 22nd, 2021. And if you recall, there was a huge storm in Texas and actually across the US. So lots of things happen. And we're going to talk about the weather and pipelines and everything and oil prices, you name it. We'll get into it. But before we do that, the Digital Wildcatters are hosting a conference called Evolve. And this is a digital, I guess this is what do you call this? A virtual event?
Virtual event, yeah.
A virtual event, and it's interactive and everything. It's the next evolution of oil and gas. They want to thank Technic FMC for being the headline sponsor. And I've never really done this on promoting stuff, but okay. Major speakers are Toby Rice, CEO of EQT, Dan Pickering, and Alan Gilmer, and of Enverus, and David Ramson Wood, and Chuck Yates. They didn't put in here, but I will also be speaking, and I'll be going down actually this week and talking about the Dakota Access Pipeline with Law IQ. So it's going to be awesome. I think the boys have done a really good job in putting this together, and super pumped about it.
For sure. Should be good.
Awesome.
Had to get rescheduled because of that storm.
Yes, it did actually kick down a little. So, okay, we're just going to get into it. All right, so the big storm, big weather.
Yep.
What are your thoughts on the major, just from a pipeline perspective? What are you feeling? Let's get into it.
Yeah, I think kind of have to take a step back and think how all the different systems broke down. And, I think depending on what you're reading out there, there's blame to go around everywhere. I think the big piece of it, though, was that, a lot of the guys in the media and gals in the media are blaming natural gas. And while, yes, there were hydrates, and yes, gathering systems were freezing up and might not be designed for these temperatures, gas wasn't getting to market for a handful of reasons. One, when you have a major production operation, you've got all sorts of power supply at the wellhead. And that wellhead gas has to get to the gas plant before it can get to the power plant, before it can get to your switch.
Yep.
And not just that, the gas is also going and sometimes bypassing power plants to go into LDCs, the local distribution companies, so that natural gas can come into your house. Mm-hmm. And that has first priority. So the power plants were also starved out. And so what I think, was happening is it took a while for everyone to figure out why the system was breaking down. And once ERCOT got power back on the grid to the areas where the production was coming from, then the gas started to come back online and things started to improve.
Because there's if you listen to, there's a recent podcast I listened to. I think it was Platts actually, and they talk about the production in the field. And Vicky Hall mentions it as well in this conference that was in Riyadh this week or last week on Wednesday, and just talks about all the wells. Basically, they had no power in the field.
That's right.
So they just shut everything. It was forced to being shut in. My initial reaction growing up around pump jacks was that because my pipes actually froze here, and I was dealing with that all weekend. So I hadn't paid attention as much as I should have to what was happening within Texas. And then I'm texting with Chuck Yates, and he's telling me that there's these rolling blackouts. And I realized I didn't know what was going on and started studying up on it. And my first reaction was, I grew up around in Wyoming and in Colorado. We don't have the same issues with shut-in production and I was talking to my dad and he was like, yeah, you literally have more insulation. You have equipment is built differently. And you typically actually, if you got a dehy or something from Texas, it was sent back because it wasn't going to work in the field. Right. So I think there's some of that, as well as no power into the field. And just incredibly cold temperatures. And when you have water, it's a massive problem.
That's right.
So all of those I think a field situation is partly why that was shut in. And I believe I think Bloomberg said that was 21 BCF a day that we lost.
Yeah, that's right. Yeah, I saw that number too. And, when you think about it, like you mentioned, Wyoming, Colorado, Bakken's the same way. When you're building these facilities, all the major equipment has buildings around them for the most part.
Yep.
It does two things in Weld County. You have the noise reduction,
yep,
but you've also got everything that's insulated. So your amine building, your compressor building,
yep,
some of your bigger skids are going to be inside. And in Texas, all that's exposed. And so when you take a plant offline and then you bring it back online, then you've got all sorts of other issues because you haven't had gas running through the pipes. And if it's not dehydrated gas, there could be a lot of water in the pipes causing hydrates. I mean, typically on the tailgate, the residue stream is going to have about 7 pounds of water per million. And so you can, on the residue gas pipelines, that's pretty dry. That's not going to freeze up, but coming into the front end of the plant, the water cut could be higher.
Yep.
And then if you've got any gap in production, it's just hard to get everything back up. You've got methanol that you're dumping in pipes. You're trying to get these hydrates out. And when you start dumping a ton of methanol in pipes, you can knock the spec off of the natural gas liquids, so they won't be able to go into long haul pipes. So you've just got this kind of domino effect of all these things that happen when you take things down for a minute. And I think that ERCOT and other power providers, power pools, are going to be able to see what happened, and in the future, hopefully, be able to keep these fields online and keep them online as a priority.
But I think I think of like the Deepwater Horizon and any major event that happens, like any major catastrophe, it's never one thing. People always have like the Swiss cheese model and everything lining up. It's usually a confluence of events that come together to have this. So you had incredibly low temperatures,
yep,
which do happen roughly once every 10 years. And I don't think this is the podcast to argue the merits of how many of those will be coming in the next few years, but regardless, you're having these 1 in 10 year occurrences. This is, a lot of people have talked about this as sort of a once in 100-year event in terms of how severe it was, but extremely cold temperatures that you don't have in Texas. So normally that you don't have, and you have to think about just your daily life. You typically don't have your equipment for this because you don't need it. You have pipelines some pipelines above ground. You have some
right,
pipelines. The difference between North Dakota and Wyoming, where I'm from, and Colorado's, you bury pipelines usually a little bit deeper. It's harder to do stuff. You have a winter period, which you can't actually like pipe and do stuff. So in Texas, it's like year round everything. So it's a completely different set of circumstances. And even where I grew up, old stripper wells, even if you had an old little building, a crappy tin building, it's a building. It means that you can like get in there, you can work, your pumper can get in there in the winter
right,
at 40 below and work on stuff. You typically just don't have shut-ins even at, sub-freezing temperatures. So it's not just, I think there's a lot of the stuff on the equipment side, and then it's that you had demand. So demand for power so high. So it was heating, right? Everybody's super cold. You want to heat your home. So demand's ramping up, and it was higher than they had anticipated at the highest peak.
That's right.
Yeah.
And it was like 3,000 megawatts higher than their worst case scenario.
Exactly. So, and I mean, we could argue whether or not they would have been prepared for that worst case scenario that they had planned for, and probably not, given all the series of events that sort of came together to make this happen. But when you have that pull on demand and that high, and you don't typically have it because people don't need to heat their homes like that, it just doesn't sort of work. So then that's when they started, basically they couldn't provide it. And so they started the rolling blackouts to, I guess the explanation was they didn't want the whole system to break, so they had to do it. But what ended up having was 7 million people without power.
Yeah. It's really unfortunate. And, it broke down across all the energy streams. So South Texas Nuclear had 1,280 megawatts go offline for almost a day. You had, coal storage piles that were freezing up. The wind turbines were frozen. The solar PV
your coal was literally frozen to the ground. And then the wind. And so if you break out the energy stuff, which EIA does great, you can see power by source by hour. And you can pull up Texas, which is basically, everybody's talking about this in the media now, but it's essentially its own grid. Texas is by itself, ERCOT. And the power, actually, they have more natural gas and actually more renewables than almost every other sector in the entire country. So if you look at the Northeast, it's still predominantly coal. If you look at the Rockies, we're still predominantly coal. And we have renewables in the mix of it. But they have natural gas. And it wasn't just renewables that went off. Certainly, the solar was covered with snow and the wind turbines were not equipped. And actually, I listened to the CEO of Vestas last night about midnight on Bloomberg. And when he was asked the question directly from them, he was asked, or it was Sunday night, he was asked directly, what are you going to do about preventing this in the future? He avoided it completely and he did not answer it. And he just basically said, we're equipped to sort of handle this stuff. And obviously those wind turbines were not equipped for it. And that's probably an easy fix, just like this is stuff you can fix stuff in the oil field. So they obviously weren't equipped for it or they wouldn't have completely froze up. And we have wind turbines in Wyoming that don't freeze up. Yep. So there's clearly a solution to it.
Yeah, I think, I spent some time in wind, and when you have wind that is coming online higher than the turbines are equipped for, they shut them down. And so what I would probably imagine is there was going to be too much wind shear. So they shut all the turbines down when this front was moving in. And then they weren't able to get them going again because they were covered in snow and ice.
Okay.
So that's typically what happens is if it gets too windy, they don't work, which is kind of funny.
That is really interesting.
But
and your gels and lubricants and stuff and everything. I mean, I think about it when you have a diesel truck in North Dakota and it doesn't start and it's 40 below and it's gelled up, like this is the same thing if you're at a power plant, anything, it's valves, everything is just frozen and not working. So it's coming together to just be a shitstorm.
Yeah. No, I mean, it's also like you think about your airplane when you're taking off, you got to de-ice those blades. Those blades, can't have anything on there or else the friction's off and the blades won't spin. And so it's a similar thing. So it's just kind of this big effect. I mean, the inside of those towers, they might have frozen up too.
Yeah.
But generally it was the blades and the rotors being locked that prevented them from going. And at one point in time, they only had 300 megawatts of solar PV that was actually operating on ERCOT's grid, which is a small fraction of what is typical. So again, it was just like a system-wide breakdown and not good.
No, so. And I don't think it does the industry any favors to blame solar and wind because it certainly wasn't their fault either. It was everything, but it wasn't. I think Bloomberg needs to be called out on this because they, their email that they put out that night was basically directly blaming the industry for causing climate change, therefore causing this. And I think that's not very helpful to the folks in Texas who didn't have power. And I heard actually North Dakota was without power, and not because they didn't have power, the weather problems, because they started rolling blackouts to send power down.
Yep.
So people are sending their kids to school without power. And I mean, they will shut in production and stuff if the weather preemptively and stuff, the weather's too bad. But I didn't lose power. I didn't realize they were doing that in North Dakota.
Yeah.
They're probably sending that to Washington and Oregon, I believe.
I don't know about that, but what I did find interesting with ERCOT in particular is that if you're a power generator, you're not actually obligated to be generating power. And so as these prices spiked because of a lack of supply, some of these guys were making decisions on intentionally not running their equipment. And that's a problem. And so, I think that, there's been a bill that's been proposed that would would help natural gas fall under the Defense Production Act and keep it, as a generating source. But I think what you saw is these guys saw prices as high as 900, 1,000, a million.
Yeah, 1,200. I heard
1,200 BTU, million BTU. And I mean, if you're thinking about how much it takes to power a big 100 megawatt, simple cycle turbine or a small peaker or something like that, I mean, that's millions of dollars an hour that are going out the door, and it's falling on the ratepayers, and that they're going to have to pass back these costs. And I saw that Atmos had bigger liability than they had cash on hand. I think you're going to see a lot of the different utilities that are a little bit upside down. So I mean, I think the federal government's going to have to step in, and it's going to be
a mess because the bills, people are really angry about the $3,000 bills that they're seeing. And I mean, to be honest, I would be pretty angry too if I didn't have power. And now I have frozen pipes, and then I get a $3,000 bill. I mean, and that's not something that anyone can afford. That's pretty ridiculous.
It's really ridiculous. So, it's funny. I mean, you kind of got it across. I'm looking at our little agenda here. We'll just touch on it now, but you've got different states that have got different policies, and they've all called different emergencies in. And so Gretchen Whitmer, the governor of Michigan.
Glad we pivoted there. That's good. This is a good one.
It is, right? And that's her name, right? It's Gretchen Whitmer. I'm pretty sure.
I think that's it. That's correct.
Yep. I don't want to say it wrong.
No, it's Whitmer is correct.
Okay. Whitmer, Governor Whitmer. So she basically put in a state of emergency in Michigan because of the propane squeeze. And what's funny about this one for me is that Governor Whitmer has also been the one that's been championing the Enbridge Line 5 shutdown, which is where more than 50% of Michigan's propane comes from. And
60. So that Enbridge Line 5 is actually 65% of Michigan and the Upper Peninsula. So it's the majority of propane that whole area gets. If that was to be shut down, all of that propane would be trucked in. And for folks that don't, if you didn't grow up in rural America, if you don't know like how, my house, this house in Denver is gas lined. I have the biggest meter that Excel makes because I have a gas fire pit outside, a gas fire inside, and I use it all the time. And it actually, we'll get into the energy content of that next to coal in just a second. But propane is, growing up in the country, you have bottles of propane. A truck comes out and fills your tank of propane, and that is what's actually heating your home and everything. In that way, in a lot of sense, these people, there is a little bit more grid reliability because they're not completely reliant. If our electricity went out when I was a kid, we still had heat.
That's right.
And we could still run our stove, and we also had a wood stove because it does get really cold in the winter. So it's just a little different in terms of how people are functioning. And I do believe that if you have, I know some people lost power for various reasons in Denver, but I've lost power here, and I still have my natural gas fireplace that I turn on, and I can stay warm.
Same in my house too.
Yep.
And it's funny you mentioned it, but part of the climate movement's been to shut down pipelines, and this is where they're getting their power from. It's coming pretty efficiently. If they shut down Line 5, then they're going to have to again truck or rail all this propane in, which is much more carbon intensive than Enbridge's Line 5 pipeline is. And so I hope that folks like Governor Whitmer kind of see this happening and start to change their tune a little bit.
And it's just over 500,000 barrels a day. And that's that Line 5. I had to look it up because I didn't know exactly I didn't realize that was also taking NGLs, but that's crude and NGLs. So that's their mainline system that's coming down. It's an existing pipeline, and they have done maintenance. So they've been working to actually, I believe, tunnel underneath there to basically get around any issues that could happen with this older pipeline. And I think Whitmer actually just wanted to shut it down. And the problem with shutting down existing pipelines it would wreak havoc on not just Michigan, but Midwest refineries. It would be a disaster.
The entire supply chain.
The entire supply chain. And not to mention the upstream side in Canada, but also severely North Dakota. It would just have massive ramifications. And there really is not a legal precedent, as we've actually seen with DAPL, to empty a pipeline. Although the DAPL, we can just side note, I don't know, the February 9th, they did I think Army Corps of Engineers they did a delay, right?
Yep.
And that was because they were supposed to come out and say something, but now the new administration, two people have left Army Corps of Engineers. They were, as with the Trump administration leaving, 2 people just left. Now they've got 2 new people, and I believe they said they wanted to pause for a briefing. It does not look good for DAPL, given this. It's not looking good at all. And that is, I think if that happens, it puts more of a risk on the ability for a precedent to do something with Line 5.
Yeah. Going to put more crude and gas liquids on rail and on truck and
fueled by diesel. So
it's insane.
Yeah. So I think we can move on from the weather, which is always a great way to start. Oh, we should say that there was I don't think a great article written in the Denver Post on and it talked about where does your electricity come from? And I have to say this story real quick. That's because I grew up where we literally went to, by 3rd grade, you went on a field trip, and you had to you went to the power plant and you went to the coal mine. And so literally when we turned our lights on, we knew where the power came from.
Yep.
And that was just a way of life. Most of the people did work outside of Craig, Colorado. Most of the people either worked in the coal mining or they worked in oil and gas. And my grandfather was a wheat farmer, hence the wheat behind you. So very commodities driven, a very commodities driven area, but the people actually know where that stuff comes from. So it's a big deal for them when, Xcel is shutting down the Hayden power plant,
right,
and these are shutting down jobs and everything. And they understand that coal is going out, but it's like it's adapting to this sort of change in way of life. And it doesn't, I can't say these people understand it when they see lack of grid reliability and then we're pulling power plants off.
Yep.
So it gets, I'm not, there's going to be issues, I think, with the populace appreciating, especially if their electricity bills go up.
Yep. They've shut down Hayden. There were 4 units at Craig. I think there's 3 now.
Yep.
2 of them have scrubbers on the back of them. I think they were going to talking about adding another one, but it's so cost prohibitive.
Yep.
Are you going to add another $200 million scrubber? Or do you just shut it down? And so, for Excel, they're probably going to be replacing that, or that's Tri-State, but I think Excel has a, interest in one of the units, but they're going to be replacing this stuff with renewables. And here we go, seeing what happened down here. And it's a megawatt of this is not a megawatt of that.
And it's the renewables is fine. Like I think people can understand, or even if that was natural gas and renewables, it's a combo. I think it's that if people are seeing, if all that becomes all renewables and you reduce that grid reliability. And I think I'm not convinced that it's like Duke Energy is one of the bigger suppliers in the Northeast. And I was listening to some of their earnings call, but they came out after the earnings call and they had said there's a Bloomberg article that they were mulling ideas to actually increase natural gas capacity, which is something I've thought about a lot because when these companies depreciate their coal assets, we foot the bill for it.
Right.
And I don't know if utility companies will like hearing that, but that's the reality. They depreciate it and the rate increase goes to us and we pay for it. So why not, if you're trying to increase reliability and you're trying to decrease emissions, why wouldn't you increase your consumption of natural gas in the near term? And, if you really have to hit those, emissions targets, 2050 of net zero, whatever, you'd pull them offline early and depreciate the assets. And that's literally Duke Energy said they're mulling that idea. And I thought it is literally the only way you are going to be able to decrease emissions in the near term. Because in Colorado, this house and most of the electric grid is about a third coal.
Yep.
So if you have a Tesla or you have an electric vehicle and you're plugging it in and feeling really good, you just need to know that about a third of that's coming from coal. And I think about 20% of that's coming from natural gas. And your natural gas is about 3 times higher energy content than your coal. So when I'm burning my fireplace, and I do it every night and every morning, it's more efficient than if I was turning on my heat.
Yep.
And in a 200-year-old house, it doesn't actually work, which is why, so Colorado, Denver has said they're going to turn off natural gas in new builds. And this really does drive me really crazy because I think I would freeze to death in this house without my fireplace. Like it doesn't make a lot of sense for me why they're gonna pull natural gas. And I don't even know how they're gonna do it in practice because unless your grid doesn't have natural gas, that doesn't make any sense.
Yeah, I think that the idea is that all new buildings, commercial buildings and residential buildings in the future, I know commercial is where they're really focused right now, will not have natural gas hookups. They'll all be electrical. And so, I don't know how you take buildings offline and replace their entire heating systems. That probably takes some time, but the Colorado Oil and Gas Association, who's one of the big industry advocates and what would you call them? A lobbying group?
Yeah, a trade association.
Trade association. Yeah. They've partnered up with like Western Natural Resources or
Western Energy Alliance.
Western Energy Alliance. Thank you. I don't have all my notes in front of me. I'm trying to do this from my mind. But they've lobbied the city of Denver to reconsider. And so, you've seen this in other cities. You've seen San Francisco try and electrify everything and limit new gas hookups. This is a different climate than there.
And Palo Alto even had rejection. Like, if you've been to Palo Alto, it's ridiculously fancy, lots of money. I mean, just go hang out there for a little bit. I don't know if they've since done this, but when they first thought of doing this in Palo Alto, they had massive rejection. It's at a minimum, and I'm sure it's way more now, to change a home. Like, it's at a minimum 10 grand to change all the appliances and everything in it.
Yep.
That's each home. It's trillions of dollars you're talking about to electrify these homes. And you're talking about go to EIA and pull up the energy by power by hour, and you can see it on the grids. Texas has the most renewables and the most natural gas.
Mm-hmm.
Like everywhere else is predominantly coal. And so if you are electrifying, you're burning more coal and you are increasing your emissions. And that's just a fact of life.
Yep.
So that's what it is. And I mean, there's not much way around. And we're declining production in Colorado already from intensive regulations in the US by oil and natural gas production. So I don't know where I'm not sure exactly where Excel stands on this, but I personally think that if they want to decrease their emissions and they want that grid reliability, that they should lean in a little more to natural gas.
Yeah. It's replacing the coal with gas is the lowest hanging fruit.
Yes. And I think also that's kind of when you start looking, and I study the global oil market, as you know, and get into the weeds on the micro stuff, but I really think natural gas is it. I think this is the like a huge pivot point, and it's going to be a pain in the ass for this administration because they're going to have to there's going to have to be a reckoning point where they realize how important natural gas is and how important low stable prices are and production. And when they're going after the oil industry as hard as they are with all their moratoriums and with their climate change executive orders, it's going to impact natural gas production, and that is in turn going to impact prices and energy security.
No doubt. And so that probably leads us into our next one, which we'll talk about. So is New Mexico and Biden's federal lands, executive order for 60-day moratorium on federal lands. And so, I don't even think that a lot of people in the, in the community really realize that a lot of the natural gas from the United States comes from associated gas from drilling from oil.
Yes.
And so you talk about energy security with gas, you start, limiting the ability to go drill for oil, you're limiting the ability for gas, for power supply, all of that. And so the New Mexico, the energy minister sent a letter into the Biden administration.
Yeah, it was I just gave a presentation last week with my old boss with the Energy Policy Research Foundation. And it was a first working group series on energy security. And I gave a quick presentation and I just pointed out like New Mexico's production. And I think it's about 1 million barrels a day of production from the Permian Basin and about 7 BCF a day gas. It's a decent amount of gas. And I mean, in some ways, if that declines, that'll help like the system and everything. But the Permian Basin produces over 17 BCF a day of gas. It's a huge amount. So when we think about pre-COVID, the U.S. is producing roughly 100 MCF a day gas. Mm-hmm. It's a massive amount of gas production. Obviously, the most in the entire world that we're producing, but a massive amount is associated, and a lot of that does come from federal land. But the New Mexico sent a letter to the acting Secretary of Interior, and this is the Energy, Minerals, and Natural Resource Department. And so, they kind of commend them for the efforts that they've made on climate, the stuff they're doing on climate, and then they sort of lay into them. This is not nearly as stern as the Ute letter.
Yes.
That's just basically saying you took away our sovereignty, but it's
which was true.
It was very true. And when you listen to our podcast, we rip into that pretty hard. But this is pretty good because it does say basically that they explain that they're already seeing an impact of gas or of rigs actually leaving the state. And so when you look at the Permian rig count and you're following on Baker Hughes, you're not going to see that. You have to actually look at the data, and you can pull, I do rig heat maps and I look at the rigs and I look at it by county and I look at the permits by county, and you are seeing a couple companies who have, they have the same rig number, but they've moved their rigs out and they've just decided to take a pause on drilling in New Mexico till everything's figured out. And ConocoPhillips mentioned it in the earnings call that they think, and I mentioned this on the last podcast, but they think this is no big deal, essentially, that this is going to be 60 days and they're going to be back at it. It doesn't feel like that's the case at all, because this letter is explaining that they're actually having issues laying pipe, and they're actually having issues preventing flaring on these wells. And that's highly problematic so they're explaining that on existing wells, this is not new permits. This is not, trying a permit that they, is kind of in the middle and maybe it was approved on the January 20th when everyone went through. These are actually wells. And it's because that order that we've referenced in detail, that order number 3395, was a suspension of delegated authority. And so it prevents, and was intentional because it was forcing the hand of a lot of folks to push through the people that he wanted to get through his cabinet.
Right.
And so it's hamstringing these guys' ability to, so their increased emissions basically these wells have to flare because they can't get everything put together. And so the state is just writing this letter explaining that they want this stuff clarified and they need this done in an orderly fashion so they can get back to business. And they're saying that because they have federal land and Texas doesn't, that they're being unfairly impacted. So I highly encourage you to find the letter and look at it. It's pretty serious. And I think that New Mexico is a Democratic state. And Deb Haaland comes from New Mexico. And I do not know if it's certain if she's going to make it now.
Yeah, she's got a tough road.
Yeah,
for confirmation.
Because there is one Democrat that's beginning to push back, and one is all it takes. That's actually, right. That in this, because it's completely split. I never thought I would have a podcast talking this much about politics, but I swear this administration is just going to give us crap tons of stuff to go through all the time because it's going to be really super fun. And then the Bureau of Ocean Energy Management, which is the BLM of the ocean, they also rescinded a lease sale, which we knew was coming. But that was just another kind of nail in the coffin. If you think that everything's going to be fine in the Gulf of Mexico, it's not. So expect production to decline in the Gulf of Mexico.
I know. And it doesn't have to be political either. This can just be about energy advocacy and making sure that your electricity bills and your power bills and what you pay at the pump is as cheap as possible. And for every one of these regulations that we're continuing to put on and all the production we take offline, that's going to impact prices on the high end. We're going to see underinvestment in the long run. That's going to cost consumers.
This gets great into the oil prices, and because I haven't fueled up yet, because I talk about this in the podcast too, is I have this F-150 in the garage that I never drive. That's actually, the plates are expired, so I haven't been driving in a while and haven't been to the DMV. But I believe when I have to fuel up, it's going to feel a lot more painful than it did when I fueled up a couple months ago. And I don't know what you drove over here, but everybody's feeling it at the pump right now.
Yeah, I just drove up to the mountains for a quick day trip, and it was 40 cents more expensive today than it was a week and a half ago.
Yeah. And that's fast and rapid. And people keep saying, I've talked on this podcast a lot it is not intended to be political. We're talking about oil prices and energy and the economics of it. And I've always studied like production and economics. And when you usually talk about it, no offense, but the facts the numbers usually speak for themselves. So, and somebody does have to cover hydrocarbons because nobody else is. So that's why we do it. But the oil prices itself the question is, are they getting too hot too fast? And I've been more bullish on oil prices than most from March of last year. I always thought that they were, was very accurate and like they're moving to 40, we're going to end the year, pushing 50, and it did that. But now that we're pushing north of 60, and this storm took off, in addition to that 21 BCF a day, it took about 3 million barrels a day offline. So that has helped propel this. And it might be a little bit of a catalyst for traders to be going a little bit crazy. And I always think there's like potentially $2 to $5 of froth, on trading upside or downside. But this just seems like it could be getting ahead of itself. We have our OPEC meeting coming up. I know this because March 5th is my birthday, and that's what's,
when it all fell apart
exactly.
last year, man.
It was my birthday. I was like, it's going to be easy to remember that. Fell apart completely. And it actually happened like on a Saturday. So if you're watching.
I got the news walking to get some coffee on a Sunday morning. I'm like, what happened last night?
Yeah, crazy. And so that's what's amazing. So the International Energy Forum, they have a meeting in Riyadh every year. And this actually took place on Wednesday. And so the Saudi oil minister spoke at this meeting. And that it's important because, so he speaks at this meeting and he opens up with some remarks. I don't know if you followed much that's been happening in this space, but the Biden administration is refusing to talk to the Mohammed bin Salman, which is the effective de facto ruler of Saudi Arabia. So he's refusing to talk to the crown prince and only talking to the king, which nobody's even paid attention to. And to be fair, Mohammed bin Salman is a force to be reckoned with. He's a completely autocratic dictator, but he's our age, and he's a little bit older. He's super cocky. He's headstrong, and he does not like to be told no or not spoken with.
Or doesn't like dissenters either.
Yes, very, very true. So, for for Biden to not be speaking with him, it's a pretty big deal. And so you'll notice the similar name because the Saudi oil minister is the same name, bin Salman. And so he makes some comments at this IEF meeting, and they were very, he urged caution, and he pushed the market not to be very, very cautious, and to not predict the unpredictable, I think were his words. And so that was kind of interesting to say, okay, we're in the lead up into this meeting, and we do these monthly meetings, and we're coordinating, and we did this massive cut before, but hey, don't try to predict the unpredictable with OPEC plus. And I think it was kind of like, hey, if you think you're gonna like push us, don't push too hard. The problem is that the Saudis and the Russians, I think, don't view the market the same way. And I don't think anybody in mainstream media picks this up at all, but I think the reasons that they think about oil prices getting too hot is something that the Russians don't want at all. And I believe most people in Saudi Arabia, and probably the prince himself, recognizes that this could pull peak demand forward. Mm-hmm. And so we saw issues. Last time we've seen prices get, pushing like this was, this happened earlier last year, but Goldman Sachs has called for $72 a barrel. Other companies were calling for 82 before a year end or by summer. it won't stay there, folks. It can't, like, it broke down. We saw this in the late fall summer of 2018, where prices WTI broke 76, Brent broke 86, and that was the highest dollar amount in rupee terms. So it was the highest that Indians had ever paid in India for oil. And that includes like when it was $146 a barrel, and demand was not supported at those price levels. And I sure as hell don't think, getting out of COVID, demand is going to be supported at these levels.
Yeah, I don't think so either. And OPEC has 8 million barrels a day just sitting there that can be turned back on at any given time. And that's a pretty significant amount of oil that you could flood the market with and reduce prices again. And, I think that, when you look at Europe, when you look at the United States, when you look at parts of Asia, Japan specifically, we've printed so much money.
Oh my gosh.
I'm
glad we're pivoting this direction, because
we've printed so much money that the only way to get out of this massive amount of debt is through inflation. And you're seeing inflation already crop up in the marketplace, and building supplies and crops, other commodities. You're starting to get it in oil. Like, I think if
it's copper, so commodities. If you guys turn on the market and just listen to a few days, all you're going to hear is it's the reflation trade, it's inflation. And it's huge because it actually does impact the economy. And the administration is playing it down, and Powell and Yellen are, they played it down today and basically said, I think everybody's saying that the administration is saying that jobs are more important than inflation right now. And they're saying they're not going to have inflation. We already have it. We're already seeing
it's here. Yeah.
And we've staved it off in large part in years past because of, we had the perfect Phillips curve. And Rob actually has a economist background as well, so he knows what I'm talking about. But if you have it's like what Switzerland had, low inflation and low unemployment. And actually it was, the end of the Obama administration and all of the Trump administration, we happen to have those things. And now, everybody's saying, well, I think the Powell wants to keep interest rates low, and his hand's already being forced. I think you could maybe even see a tick up slightly before year end in interest rates, because we're seeing the 10-year treasuries, 20 or 30 year are all moving up.
Yep.
And that's not good when they're moving up and the Fed is not doing it. Your Fed is supposed to technically signal, and you're supposed to be signaling, and then those kind of move with it. And that's the opposite. They're basically saying, we're going to let the economy heat up because we want jobs. And the problem is, economics is not a perfect system. You can't let some sectors heat up and others not. And so this $1.9 stimulus package, the problem with it is that it isn't really targeted. And this is, Bloomberg and all these other entities saying this, it is not a very targeted bill. And so it goes to a lot of different entities. And that's what's making a lot of people concerned about this inflationary stuff, is that it's going everywhere. And if it was really targeted to the sectors that really needed it, it would probably be a lot less.
It would be a lot less. Yeah.
And so in this, as you've noted which was great in some of your podcasts with Colin, is that like these super, you have super low interest rates, you have money flooding into the SPACs are just drive me absolutely insane, because the money's just going crazy into them.
Yep.
And the fact that, Elon Musk has said a few things that I don't completely disagree with, but the fact that he can invest in Bitcoin and run Bitcoin up, and then he can say, oh, maybe it's getting a little too hot, and then it slides back down. And the market, this is okay. This is Bananaville,
Yeah.
This is not normal stuff anymore.
He did it with his own stock. He's doing it with Bitcoin, which is equating to his own stock.
Exactly.
He's done it with Dogcoin or Dogecoin.
Yes.
How do you say it? Dogecoin?
I think it's Dogecoin.
Dogecoin. I don't know, Nini. Probably should have. But, did it with GameStop. It's just everything in the market is hot. And, I think that the biggest commodity that I've read about that's gone Bananaville has been lumber. And so you think about about new home construction and some of the things that we need for a growing population, or to get things back, kickstart the economy on maybe more of a blue collar level. Traditionally that's been home ownership, home buying, etc. Now, are you going to be able to buy a house? Like, all the existing real estate is already inflated up. We see it here in Denver.
Oh, Denver. This is insane. My neighbors were just telling me what they're looking at. It's like $1 million base in Denver right now.
Yep.
And it's crap. I'm sorry. It's ridiculous.
But now, you go even a little further out, and the economic decision isn't that much greater if if it costs 20-30% more to build a new house. And so there's just a lot of these things happening in the background that I think that, everyone needs to be a little cautious of and keeping an eye on. I'll try and bring it back to oil because this is PetroNerds after all.
Oh, it's fine. I don't mind the econ. Well, and also so that inflationary piece, but I do believe that oil is a big component of this, because I think that when people were waiting, so if you listen to people talk about inflation, it's oil prices were always low, so they were never concerned about it. And so we didn't have it in the previous years. We just didn't have it because we've averaged 53 WTI for 5 years pre-COVID, and that's kept a lid on it largely. But when you have in tandem, you have copper prices going up, and it does help that when one commodity is going up and everything's pulling it, and there is the way money's being spent, the way you have low interest rates and the green frenzy. And this is really real in terms of, I think, driving up commodities and rare earth minerals and the mining and everything that's going to go on that's going to have to go on to meet these battery requirements and these battery needs, or these so-called needs and again, this is all happening without clear directives. So we have some very broad executive orders, which every podcast I say, print them out and read them. Go to the website and actually read the actual executive orders on climate change. They're so big and so broad. And so this is all sort of between the stimulus package and this. And I do believe that the stimulus package, there is a lot of stuff in it, right? So it's not just, the reason there's concerns about it.
I think they call it pork.
Yes, it's called pork. Thank you. So a lot of stuff in it, and it's kind of fueling this inflation in addition to these oil prices. But I think the problem is that this all could turn the wrong direction. And I think they want to create jobs, and that makes sense, right? They want to push for the job side and sort of deal with inflation later. But what may end up happening is we could hurt the job side, and then we have inflation and high oil prices and still have, the sticky unemployment. And that's going to be really tricky.
That is going to be really tricky.
Yeah. So and energy prices will be a factor in that. And the jobs thing is huge because, I just have to say, this industry has lost tens of thousands of jobs and is expected to lose tens of thousands more. So if you're talking about jobs, this is, it was the article that, I put this on LinkedIn, but there's an article that the Economist did on basically just a very clear article on what the Biden administration has done in terms of, it has pump jacks on an image, and then the Biden administration's going after climate change, and very clearly says that oil and gas production in the U.S. is 1% of U.S. emissions. So I don't think it's unfair to say that the oil and gas industry is being unfairly penalized and attacked from an emission standpoint, if that's what this is about, if it's only 1% of U.S. emissions. Yep. So it doesn't, and essentially they explain that if you electrify everything tomorrow, so if our grid was 100% electrified tomorrow and all the cars on the road every single one of them was electric, that you would still have half of the emissions in the US would still be there that we would have to deal with. So that's in itself, and the grid is a big component of this whole, of these climate change agenda and everything. And so it's being bucketed together as let's greenify the grid and let's go after oil production. And those things are not the same. Yep. We're not using oil production in at least here in Colorado. There's a little bit of oil production still used in the Northeast for power that I just realized, but not a whole lot.
Yeah. And I think, we'll bring back this too hot, too fast thing. So that's, again, back to OPEC being able to flood the market. OPEC can flood the market, bring several more million barrels a day online. Even in a higher commodity price environment, it's harder and harder to finance oil and gas projects today. So we're going to ultimately wind up losing market share back to OPEC and reducing our national security by being more reliant in the future on, future imports if we're hamstringing ourselves. So again, not to be political, but I think that as everyone that listens to this thinks about this kind of stuff, it's just really important to be knowledgeable so that you can have these conversations, or mail your senator or mail your representative and, talk about some of the concerns and how this all is woven together, because we really are, we got to a point as a nation where we're very much independent of the decisions of a lot of different foreign powers in OPEC, and to kind of cede that back away and, increase reliance on China and their rare earths for our electric batteries. And it's just a recipe for disaster, in my opinion.
Well, the numbers are real. It doesn't mean that you don't have to be anti-renewables by any means. I mean, I do think they work extremely well together, and we can beef up, the green side, and you can beef up, wind and solar and really increase your resiliency and reliability. But I think something really key to point out is that, and I put these grid, these power things in my energy security presentation just to point out, is that it's the storm kind of catalyzed this sort of the reliability and redundancy. And this happens in, when you think about pipelines in oil and gas, when you take one pipeline out of the system, technically, do you have enough pipelines in North Dakota without Dakota access? Yeah, but, you reduce this redundancy, you reduce this ability, you don't get to the markets that you need to. So it doesn't completely work. And the same goes for power, is that when you start pulling pieces out, you reduce that resiliency. And something really interesting actually from this IEF meeting, and gets back to this energy security. And I think, we dropped production from 13 million barrels per day in the US. We're at 11 million barrels per day. We're still technically a net exporter, I think, with product, but we're losing that a little bit. And we did we've impacted the global oil prices because we had so much crude there. And that means that our flexibility in the Middle East, our flexibility in geopolitics has just been there. And now we actually have, I think our Asian allies are starting to get a little bit concerned about our gas supplies and, that sort of redundancy. They know technically we have plenty of gas, but are they going to be able to access it? And at what price are they going to be able to access it? But something to point out is that, so BP has had these forecasts, and I've ripped on them pretty hard in previous podcasts, but BP has these very lofty forecasts, which now Shell and Total and all of them have similar ones of basically peak demand has already peaked, and that we're sort of have peak demand and it's declining. But Spencer Dale, who's the chief economist, who I do know personally, and he's a former Bank of England guy, he explains he explained in a podcast with Jason Bordoff of Columbia University, and he explained at this Riyadh meeting last week that these forecasts are not what they're going to be wrong, and they're not how they actually see the world playing out. Well, we're going to wrap this up, but I think that there was a couple things that I was pointing out from this Riyadh meeting and Spencer Dale, the chief economist of BP, and some of his comments. And so he walks people through and explains to them this, this peak demand scenario and everything, and these other scenarios, and basically the world that they have to work in and live within. But he explains that, he essentially explains when they're asking him in Q&A about needing to invest in crude oil. And, there's stuff that basically Shell, BP, and Total, all of them are explaining that they have to invest in, or they have to produce oil and natural gas to actually fund their renewable expansion projects. To actually go green, they have to fund it. And Total actually says we need to be black and green. And it's a little bit different from what other folks are saying. So BP, when Spencer Dale's asked about this potentially shortfall of investment in oil and gas, he explains that is something that Wall Street does not understand. And I think personally that he needs to be spending more time explaining, or not necessarily him as the chief economist, but the investor relations folks at all these major oil companies need to be spending more time in New York explaining to these Wall Street analysts that if you don't invest in oil and gas, you're going to have a shortfall of supply, and we have to. So the IEF Riyadh meeting, basically you have every, International Energy Forum, you have the International Energy Agency, you have all the oil ministers, and they're giving their outlooks and essentially explaining that we are going to have a shortfall of investment if these companies don't do some basic investment. And that's highly problematic because the same Boston Consulting Group said the same thing. Jamie Webster is a friend of mine, and he was talking about this as well, is that you have to invest in this. And yet the market is completely dislocated because it's not favoring any oil and gas investment. It's not favoring oil companies at all, regardless of how green they are. And while I've never been a big proponent of shortfalls of investment, because I think the industry is very innovative and tends to lower those costs. And as you pointed out, we have a massive amount of crude oil sitting on the sidelines. So, but the reality is that in the long term, 5-10 years out, you still have to be spending money and maintaining fields.
Yes, you do. You see it coming offline in the North Sea. You see because the EU doesn't want to touch a lot of it, and the EU banks don't want to touch a lot of it. You're seeing it now come offline in the Gulf of Mexico because of some administration changes, or maybe not come offline, but just a lack of future investment, right?
Yep.
We've had 3 offshore drillers just emerge from bankruptcy, Diamond, Noble, and one other one that I can't think of right now. So it's just a lot of these projects that aren't shale are long-term 10 to 20, 30-year projects. I mean, Canadian oil sands, 25-year projects, the not in situ, but the actually open pit mining. And, it's going to favor companies like that have these long-term projects if supply continues to erode from the marketplace. And you're right. Like, we said that, OPEC's got a lot on the sidelines, but that tap is only going to be open for so long. And this is a long-term problem. And, we aren't going to be able to replace 100% of the internal combustion engines in the United States by 2030 or 2035 or whatever.
No, and you may not be able to. There's even
1.5 billion ICE cars in the entire world. So
yeah, and these guys are, so when you listen, that's what these economists and stuff will tell you. So that's what these people from Boston Consulting Group and BP will tell you. But see, I think they're afraid to talk about it as much. I mean, in this forum in Riyadh, of course, they're talking about it. But I think they need to get, the world has to get comfortable with realizing that you cannot get off of fossil fuels tomorrow. And that you can't, even if you force, which in America, we have a democracy, and I don't think you're just going to be able to force all of this upon everyone to just immediately change overnight. So I'm just not sure it's going to be completely.
Yeah, I'm afraid that people are going to have to learn the lesson the hard way when they're paying for it with their pocketbook versus the media blitz and ESG frenzy that you kind of see going on. That is part of this messaging and part of the reason it feels like BP's running scared. They've been on defense since Deepwater, and they haven't been able to go out there and do some strategic things like Chevron has, right? I mean, Chevron's kind of really positioned themselves. They took a run at Oxy. It didn't work out, but then they
ended up with $1 billion windfall.
With $1 billion windfall and an investment in Noble that looks really smart now. And, BP's been going the other way. Total's been going the other way, and their earnings reflect it, right? Like you kind of see it in their stock price. Yep. You see it in their returns.
You see it in their and you hear it in their tone. And I think, I mean, we talked about a ton in the last podcast of the difference between like BP and Chevron, completely night and day. And I was actually encouraging listeners to really, if you do want to understand a lot in the renewable space, to listen to a lot of these earnings calls because they are making real efforts to do it. And I think the bet on natural gas it is where the market's going. It's strong, but they seem conflicted now between the ESG push and the movement, between how far they're going to ramp that up. And I am just not convinced that they are going to make money in renewables. The way that the market is characterizing it, and the frenzy and the SPAC drive and everything, I just feel like they feel like it's going to be more. And it's not dissimilar from shale and how people thought you were going to get 30% rate of returns, and those didn't materialize.
Yeah. And I think, I've covered it on my podcast with Colin, but, the reason that a lot of these renewable projects work is because the cost of debt and the cost of capital is so cheap. So you can go execute on these like 6 to 9% return projects when it doesn't cost you that much money to go get them executed, where in oil and gas, the cost of capital is higher. Just BP's operating structure in general costs more than a renewables company does.
And their access to that's the whole point, is their access to capital. So one of these things that's why Wall Street has to get this is that, the world is going to have a shortfall of oil if these companies can't access capital. I don't necessarily think there's going to be such a shortfall of investment, but I do think that there has to be a reality that you still have to fund fossil fuel companies. Yep. And there has to be a balance of that. And that the frenzy of ESG and the fact that you and I'd say, Ethan and I, we could start us back tomorrow with a green name and say we're starting a battery company and probably get money.
Yeah. I mean, and I think the reason that you kind of see the swings in what the WTI price forecast is because that, I think that there's probably going to be a limit and a ceiling on how many rigs can actually get deployed with future capital, right? Like there's still a handful of private equity backed companies that have dry powder from the, 2017, 2018, 2016 vintage, that weren't ever able to exit. And, some of the majors are still, deploying capital, but in general, that money is going to run out and that next raise is going to be harder. Yep. And that is whether that happens in 2021 or 2022 or 2023, the US production is going to have a hard time growing if we can't access money to go drill and complete future wells.
And this is probably a good point where we can sort of conclude, but I think that one, we're going to have earnings calls. Continental has come out and Devon's come out, but we haven't seen, I look for like Pioneer Natural Resources and EOG to really see, and Diamondback to see like who's moving the needle and what they're doing and how they're, spending their money. And, and Diamondback saying for every 1 penny that they save, it's, like $1 million in free cash flow. And that's the stuff I'm listening for and want to hear, are they going to be moving the needle and how much of that free cash flow are they going to put back into production? That we'll have to watch that. I think as I've said with Ethan, I think from a technical standpoint, the Permian and the US actually has a lot of running room left. But I think this side of the money side is going to be really important.
Yep. And I know we've talked a lot about, both renewables and oil and gas on here. And I think that the biggest opportunity is to integrate renewables into oil and gas and to integrate microgrids and distributed generation. And if you do that,
Microgrid certainly would have helped out in this power situation if you would have had your own power.
If you have a power island that's supplied by your own natural gas and some solar, some PV panels.
Who knows we don't know if that would have actually technically worked in this weather, but yeah.
I mean, it's a better chance than relying on your line drop. And a lot of the midstream facilities, they can take the residue gas coming off the tailgate of the plant and power a turbine that gives you electricity across your entire facility. And at the wellhead, again, you still have the issue with like we talked about earlier with the wellheads receiving power. But if you ran that power back out to your field, it could be something that people need to start considering. And I think that, some of I think a lot of the smarter folks on the PE side, I know, Double Eagle's been looking at some renewable projects, and there's a handful of guys that are starting to think forward. And so it really is an opportunity to integrate that into
But they're not doing it for
operations.
They're doing it because it could make an intelligent investment decision.
That's
as
right.
opposed to a virtue signaling, or as opposed to, hey, we're hitting this target on our ESG because we think it's going to keep us in a portfolio manager's long only.
100%. If I can reduce my lease operating expenses by having integrated renewables and lower power costs than the power supplier for the area is going to do, why wouldn't I want to do that?
Yeah.
And so that's where I would encourage everyone that is watching this that, works at an oil and gas company, present those kind of ideas into your employer and help try and drive it that way, because, there's a smart way to do this too.
Yeah. And I think this gets back to just the whole idea of driving costs lower. The industry has to be extremely innovative and very intelligent, drive these costs as low as humanly possible, and use every technology above board to do that.
Cool.
So with that, I think we should conclude. And I really want to thank you, Robert, for being the first guest host we've had on the PetroNerds podcast. So this has been awesome.
Thanks for having me. This was great.
Yeah, great. And we'll definitely let Ethan, ref, and we can duke it out a little more and just have some fun on the next one.
That sounds good.
Awesome.
Thanks, Trisha.
Bye.